Hey, what's up, everyone? Today is the 9th of January, 2024. We're going to talk about Fundstrat Tom Lee. He's bullish on the stock market. He was bullish 2023. A lot of people who went against his original analysis of seeing the stock market go up to conclude the year now has egg on their face. And he actually is the victorious one. He actually pretty much hit his target for 2023. Now he's saying, according to Benzinga, that 30% more is still in tune with the stock market. He's looking for the price to go up another 30% in the SPY or the SPX, the S&P 500. This is even amid expectations that Jerome Powell is going to cut interest rates and also seeing a sharp decline in inflation. Fundstrat's Tom Lee suggests a potential 30% surge for the S&P 500 this year. This article must have came out in 2023. Anticipating a decline in inflation and a possible interest rate cut by the Fed. Lee, a renowned bullish strategist, like I told you, he was bullish all of 2023, anticipates that SP 500 to touch 5,200 points by the close of the year, indicating a 9% increase from the present level, reported Business Insider. Lee's projections or predictions hinge on the expected Fed rate cuts and a significant drop in inflation. He believes these factors will provide the necessary conditions for stock prices to skyrocket in 2024. The rate of price increases is slowing, Lee commented in a recent interview on CNBC, signaling inflation could fall 2%, a very visible possibility for 2024. This is what Jerome Powell is trying to do. He's trying to create a quote-unquote soft landing. Many people, especially analysts on Wall Street, was trying to say that it's impossible to create a soft landing. Well, now you have Tom Lee right here saying that it's a very visible possibility to bring inflation down to 2%. That's what he's trying to say. He also suggested a more than 50% likelihood of the S&P 500 achieving more than 50%. What is that? 75%? Shoot, 51% is more than 50%. Double-digit gains in 2024 despite similar gains last year. This prediction is based on a century-long trend between stocks and treasury yields. Lee pointed out that since 1900, stocks had often seen double-digit returns when the 10-year treasury yield sits between 3 and 4%. A 30% surge in stocks this year would be implied by an S&P multiple of 20, assuming corporate earnings grow around 10%. All that technical jargon. Simply saying a lot of ifs, ands, or buts. A lot of things needs to fall into place just for the S&P 500 to go up 30% is what it's literally saying. We need to see the 10-year treasury yield sit right smack dab in between 3 and 4%. And then also, corporate earnings needs to grow around 10%. But first, he was looking for a 9% increase. Okay. Now, if the treasury yield sits between 3 and 4%, corporate earnings goes up 10%. Then 30% is what he's looking forward to. I'm quite sure he'll continue to talk that throughout 2024. But let's go ahead and look at the SPX. 9% move to the upside right now would take the price for the SPX around 5,200 points, 5,195. Very logical, probable, because when you look at the chart, like, come on, are we not bullish? Is not the SPX, the S&P 500, not trending higher? Most definitely. But then I want you to look at this. We are seeing it trade around all-time highs. So we are going to identify where the sellers are. This is the last indication to where sellers hit the market in the SPX. So we're going to plot that on our chart. And we're going to utilize that for our benefit. Okay, even though he's looking for a 9% run to the upside in SPX, it doesn't mean that we need to jump on board right now. We need to see price in the SPX break above our sell zone right there that we just created. Okay, we have to see that first. Very, very positive move yesterday in the market in SPX. This indication of strength right there, the SPX ending up 1.41%, as well as, let me show you this. These 2 days, December the 20th and the 21st, tells me that this is where buyers are hitting the market in the SPX. So, as long as price in SPX or the points hold above this buy zone, we're going to be bullish too with Tom Lee. It's just that simple. So let's look at this on a different time frame to see if the SPX is still bullish though. The 2-day time frame still looks pretty bullish. We have 8 hours and 52 minutes left so far. Here it is on the 3, 8 hours and 52 minutes left on the 3-day time frame. And if we see the price action print the way that the 3-day bar looks now, then Tom Lee, I'm in his camp. I'm looking for the price to go up. Because the prior 3 days, the market went down, but we're currently seeing the price reverse and go right back up. That's bullish. What about on the 5? This is a probable precursor of strength, even on top of the volume that came through the last 5 days. This 5-day bar, to go along with this 5-day bar, is telling me everything is running according to plan in terms of strength right now. The only kink that's in the chain is that sell zone between 4,800 points to, let me see, 48.25. That's it. But given the amount of strength that we've seen under that sell zone, I mean, you have to look forward to price going up. Okay. Let's take a look at this, see how we ended on the 6 months. Take a look at that. I'm pretty bullish in the SPX too, or the S&P 500. Given the last couple of 6 months bars. Here it is on the 12. This is how we ended the 12 months of the SPX. We ended the year up 25% off of the last year, 2022. This market is massively bullish. So he's saying like a 30% return if the treasury yield, the 10-year treasury yield stays between 3 and 4%, and corporate earnings goes between 10%, 30%. You see that? 6190. 6,200 points. Now, we are well away from our overall trend though. I don't think it's going to be a straight shot up there to the moon though. I don't think that's going to happen. But let me go ahead and do this. Put this on the chart, back on the daily. We are going to look for price to go up in the SPX as long as it really holds 4680. And our first target is going to be at the lower end sell zone here, which is 4803, 0.86%. Second target is going to be around 4825, which is 1.27. And then anything above that, with that 9% run that Tom is looking at, let's go ahead and do that too. So he's looking at 9%. It takes us to like 5,200 points. Let's run it to 5,000 first. So yeah, we'll do that right there. Go ahead and give me your thoughts. I'm done. Make sure you maintain the profitability, and as always, trade different.